I think it's really important to also take a look at any kind of macro-driven events and what's been going on in the traditional space as well. So in terms of macro, I think I'm going to keep it here at a very high level, but there's still that kind of uncertainty growing from tariffs and the resulting trade wars and what this may mean for inflation in the US, but also inflation in the countries that are targeted by these tariffs. So that is still leaving some question marks. At the same time, last week or recently, we actually got some inflation numbers from the US from CPI and PPI, which actually were more favorable than expected. So even though this is posing some questions on the trajectory of rate cuts and inflation, it does seem that everything is still largely on track. And this is what Jerome Powell also mentioned at the latest FOMC meeting minutes too. There's a little bit of uncertainty still in the US, but if we move over to Europe, there's still some growing geopolitical risk, I would say, particularly as we've recently found that the US is slowing down or they're stopping their support for Ukraine. And this means that Europe will have to take the burden here or will have to finance this conflict. And we've recently seen that the German government or the Germans have recently voted in favor of a 500 billion infrastructure fund that should also go into defense. So, of course, this fund has to be funded in one way, and we may see higher borrowing costs in Europe as a result. So, generally speaking, macro is still not yet out the winds. We have a little bit of clarity or a little bit of sunlight in some areas, but I think it's worth also keeping that in mind as we take you through the latest events and where we could go from here. But moving on to crypto, I think we'll just focus on Bitcoin for now for this slide. And it's quite funny because if you draw just a monthly price chart, this month would look flat. But realistically, it's been a very busy month. I think I speak for both Kareem and I that the first 3 months of this year have actually felt like the last 4 years combined in terms of just how much news and how many developments we're seeing in the crypto space. Starting with the crypto summit in early March, we got the news that, of course, following the inauguration and his presidency, that crypto is going to be a very important feature for this administration. And they had their very first crypto summit at the start of March. And this coincided also with a lot of rumors, but also an incoming executive order that was signed regarding crypto reserves. On the surface, this is still a positive development. We're still going towards the goals that Donald Trump had set out at the start of his campaign. But to me, it did seem that market viewed or were largely impatient with these news. We saw this following the inauguration, where markets became impatient with the pro-rhetoric and wanted structural developments. And I think this is something similar again, where the lack of details on these two topics or on the crypto reserve specifically started bringing markets slightly down because no details were really shared or as much as the market had expected. So this is what coincided with a little bit of that up and down movement at the start to mid-March. However, there were also still several positive news and developments to Bitcoin specifically. Pakistan is a small story relative to the rest of the developments, but it's another cool development that shows some of Bitcoin's other potential, that it can be used to diversify your energy grid, or you can use excess energy to actually mine Bitcoin and reserve, and as a result, receive a reward for it. So that's another cool story that we pointed out. And then another one, which we received last week, was to do with the SEC. The SEC had actually declared that proof of work rewards, such as those that are earned in the Bitcoin system, that they're not securities. We've heard Donald Trump say that he wants to make coin mining really the base in the US. And so this may be the first kind of step to getting more developments for this subsector. Altogether, though, in the background, we're just seeing the strategic reserve race continue. There's even more live strategic Bitcoin reserve bills open in the US. Senator Lumens has also opened up another Bitcoin-related bill, which would see them be able to also invest into Bitcoin ETPs in the US. So there's a lot of developments, and this is not just to the nation-state level, but also we've seen Strategy add to their stash, and they now hold over 500 million Bitcoin. So altogether, been a very busy month for Bitcoin. The price hasn't broken out yet following the downturn, but it is still showing relative resilience. We're above a lot of the kind of key structural support levels, as we'll show later in the slide. So all in all, it was a busy but rather flat month, actually. And part of the reason, I think, is when we take a look at basis. So we touched upon this in our last session as well, when I was here together with Michael. And the basis trade is a key way for institutions to actually get exposure to crypto assets, but remaining market neutral. And so, in a way, what you can see from this chart is that the basis has significantly come down following the market euphoria in November, December. And that's because the futures and the spot prices are becoming far closer together, which in turn means that the basis has shrunk. And therefore, the yield, the difference that institutions can pick up by doing this trade is smaller. What that means then is that we see less participation from these institutions. And the main way that they tend to get their basis exposure is actually through the US spot Bitcoin ETFs. And the reason for this is because aside from all the benefits that we believe in ETPs and ETFs, generally speaking, for crypto, one main benefit for these hedge funds or market participants is that the Bitcoin ETFs, ETPs, they operate in traditional environments. And so as a result, it's far more efficient for them to do basis trading with ETPs, ETFs than it would be for a direct holding. But nevertheless, what we saw with coin ETF flows, it largely mirrored the price action and largely mirrored also the basis. But one outlier was that actually last week we saw around $745 million in net flows into the Bitcoin ETFs in the US, which is actually the first time we've seen a positive week since the end of January. And it's a real outlier because while the basis remains shrunken, we have seen these inflows. And so to me, that shows that it's not institutions or market neutral participants, but rather it's longer term holders who are doing this as a long-term investment, which is a very positive signal as it shows that sentiment may also be coming back to the market.